Hi, welcome to this video, Dave, which is on the 9th of December. It's Thursday. In today's video, we're going to look at an opportunity in the Forex markets in relation to trading high-impact news. And in terms of the high-impact news I want to discuss in this video, it's US inflation data that is out tomorrow, which could generate significant volatility. Market very focused on US inflation. If it comes in strongly, then that means the Fed will have to increase the speed of their stimulus tapering and raise rates more quickly than the market expects. Now, in terms of regular viewers, I know this already, but over the last couple of months, we've been very focused on buying the USD and the JPY. And, the safe havens have done well, but both the JPY and the USD have had a dip into the inflation number. Now, they will go higher if we get a strong print in our view. So I think it's a great opportunity to buy the dollar and the yen. Now, in terms of pairs, we're going to look at our favourites. So we're going to go over to the charts right now. Just before we do so, though, always keep in mind, it is my view as of right now. It can, of course, change in line with the market action and conditions. If you want to learn all our trading techniques and check out our daily technical sentiment analysis of 14 FX pairs, all you need to do, click on the link beneath this video to get live access to our member center. You can also follow our Facebook page, join our Facebook group of traders, and finally check out our recommended regulated broker. Right, let's go and take a look at the trades. So just before we go and look at the trades, let's have a look at what the market expects in terms of CPI. Now, excluding food and energy, month on month for November, the market is looking for 0.5% down from 0.6. Now, in our view, the important data is the year on year. Okay. Now, in terms of year on year, looking for 4.9 up from 4.6. So, market is looking for inflation to be high. Could it come in a little bit higher than expected? Okay. Now, in terms of this, we are big fans of an analyst group called Nordea. And regular viewers will know we consult Nordea a lot or look at their material. They've been really spot on in terms of US inflation. I'm going to post this report on the Facebook page, but they're looking for inflation to come in at 5.1, excluding food and energy. So a little bit higher than expected. And they make some points here. Headline inflation should be 6.6 in their view. And they say the Fed will double down on tapering speed at the FOMC 14th to 15th of December, which is obviously next week. Stay long the USD as the Fed is going to hawk things up. Now, my own view is, we should see, or if we see USD strength tomorrow after the number, we should follow on to the upside. I think the yen will strengthen with the USD. You can read this report. I'll post it on the Facebook page, but I want to go now to my first pair, which is wrong page, USD CAD. USD CAD. Now, in terms of why we like the CAD, we like the commodity currencies generally short against the USD coming into CPI, is because they are very sensitive to risk on, risk off. If we have a strong CPI number, you get risk off. Commodity currencies very vulnerable. Okay. Now, in terms of regular viewers, now we've been following this one up since it bottomed out above 123. We got to above 128, then we came down and we got stopped out below 127. Now, yesterday we had the Bank of Canada, and the market was expecting a really hawkish Bank of Canada. It didn't happen. We dipped to the round number 126 before the Bank of Canada, then recovered, and today we're moving up a bit as well. Now, the Bank of Canada, they were not hawkish, or as hawkish as the market expected. We expect the Fed to turn hawkish, and that means we should see a resumption of the uptrend. So you have a nice move up, correction, and now expect us to head north. Now, we've come in early. Tomorrow we'll come in after CPI and add to our position if we can. You can check what we're doing in the member center. But we're expecting, if we see the dollar start to gravitate to the upside, we're expecting new daily highs then 130, then 135, which you can see here as our targets. And if I just go over to the monthly chart, we expect to push up this level here. You can see why I've picked out 130, and then we think 135 is on the cards. Okay, we're also looking for crude oil to continue its move to the downside. Risk off will hurt the CAD. Now, the next pair I want to look at is another commodity currency, which is AUD USD. Right, in terms of this pair, we do have a really nice fall. We were short, and then we get the nice rally up, get taken out on stop, and now we've sold off the 72 level and this 20-day moving average. Now, we use the 20-day moving average a lot. In a strong downtrend, it will tend to provide resistance if you're bearish, of course. So it's a level to sell into. You can also buy back to the 20-day moving average in an uptrend. Now, in terms of this pair, in small, what we will do is if we were to run on a little bit to the upside, we key off this level to add. Okay, presently our stop is behind the 73 level at 73.30, or we'll add if we break these two candles here. If we break through the low of yesterday, you can see I'll bring the stop down to 72.80. Now, how much downside are we looking for? We're looking for monthly support 70. That's also daily support, and then a move on to 65. Okay, so potentially over 600 pips. We'll see what happens with this one. Now, I do like another commodity currency against the USD, which is NZD USD, but I'm not going to look at that one just yet. I want to look at Euro USD and also a Euro correlated currency we really like. So let's go and take a look at Euro USD. Regular viewers know we're extremely bearish of the Euro. We did get a nice move down here. Then we got clipped out on stop. We've come back in short at 112.90, and we're just at the moment in time sitting above our entry at 113.50. Not much volatility. We have bounced above the 20-day moving average. My own view is if you want to trade the Euro short, just come through this low here, okay? And then we should go down to new daily lows, 110, then the par level. So, yeah, we're just extremely bearish here. We think 114 will be a really hard level to take out. For more info on the euro, just see my previous videos. But in terms of our major focus, it's in the euro proxies, and our particular favorite, which we followed for a while, is USD SEK. Where's USD SEK? Sorry, I'm on the wrong chart. US dollar against the Swedish krona. Bought the breakout. Goes up really nicely. It's a volatile pair. And now we've got kind of choppy sideways action, okay? But here's the 20-day moving average. The 9 is a big monthly support level. For fresh positions, just come through the big 9-10 level. And I think we'll get a new daily high. So I'm looking for 9, 5, then 10, okay? Now, in terms of the monthly chart, I'll just show you this one. We cleared out these bodies here in the tail, got above 9. And now we're just kind of pausing. That level, I think, should be targeted. And possibly, if we get big risk off come into play, we could get up as far as the 10 level, okay? Now, in terms of the SEK, very, very sensitive to risk on, risk off. It is like the commodity currency. So I think this one could be a good potential trade on a breakout. Now, what I want to do is go to my last USD pair before I do some JPY pairs. Where are we? Okay, we're going to look at NZD USD. This is the commodity currency we haven't been bumped out of. We came in at 71.40, and it's a really nice fall. And now we've gravitated back up. Now, in terms of this one, if you want to come in fresh, I'd buy through these two bodies here, so through the upsloping trend line. So that is 67.80. Okay. Now, in terms of if we go higher, our stop is behind this level here. If we were stopped out, we probably look to sell into the 20-day moving average and 69 level. Okay, we might run on a bit further to the upside, but this is a really nice downtrend We'll see if we get continuation, but yeah, if we do get bumped on stop, we would look to sell. Our stop is pretty close now because we want to protect a little bit of profit. Okay, so there's some USD pairs to look at. There's more, but I particularly like the ones we've looked at. Now let's take a look at some JPY pairs. Right, I'm just quickly going to do the yen against the three commodity currencies and also the euro. I did do a video on the yen at the weekend. We're extremely bullish of the yen longer term, okay? And speculators are still heavily short the yen, okay? So we're looking really for a lot of strength going forward. And of course, risk off really does benefit the JPY. Now, in terms of this one, it was a nice move down, and then we've rallied back up. There's the 20-day moving average just below the 82 level. You can see what I want to do here. I'm going to sell at 80.80. I didn't draw the line in, but it's a round number here. So we're going to come in through the round number with a stop behind 82, so 82.30. But if we rally up to that 20-day moving average at 81.80, I'll sell into it with a stop at 83.30. So behind this big red candle, which I think will be very hard to take out. So I'm going to sell higher or lower. Plenty of downside in this one now. It's corrected, oversold. Looking for chart lows, then 76, then 72. That's, of course, longer term, okay? But really like the look of this one in terms of selling. NZD JPY, just like NZD USD, this is one we haven't been bumped out of. We're still short from 81.70, so back here, nice fall, corrective action. We bought the stop in now to 77.70. Now my view on this one is if we get back through 77, the round number, these two bodies here, say 76.80, we should go to chart lows, then 72, then 68. But we could bounce higher and our stop could be taken. Okay, we put our stop close, obviously, to protect some profit. If our stop is taken out, we'll look for topping action into 78 and the 20-day moving average, which will creep down as price goes up, and then put our stop back behind this big red and the 79 level. Okay, so we'll see what happens with this one. CAD JPY, since I did my video the weekend, bumped out this one on the rally up. But what we've done is we've just resold. We couldn't hold above 90 or the 20-day moving average, and we came back down. So coming in at 89.90. Now, in terms of this one, I'd probably add through 89. If we get above 90 and go up here, I'll look for topping action. I do not see this big red getting taken out. Of course, it could happen, but yeah, looking to get in lower or higher and add in this one again. Yeah, plenty of downside potential. I covered the monthly support levels at the weekend. So I showed the monthly charts, 84, then 80. So yeah, so decent move down, rally to correct oversold to the 20-day moving average. Now we think we're going lower. Any rally unlikely to be sustained. Now I need to go to Euro JPY. This one we were bumped out of as well since I did the video at the weekend as we came up above the 20-day moving average, but all we've done is resold. Okay, stop behind this big 130 level, which I think will be very, very hard to take out. So this one you could sell through the 128 level. If you're bearish, you could sell now. There's plenty of downside in this one. We're going for the big 120 level. If we bounce above 129, you could sell back through level, stop behind 130. So the yen for us looking very, very bullish longer term. The correction against it, selling opportunity. Obviously, I've looked at a few USD pairs. There are more opportunities that look good as well, but good few in this video to consider in light of what could be a volatile day tomorrow in terms of with the inflation data. Hope our view is correct, but we shall see. That is the video for today. Thank you very much for watching it. Take care. Have a good day.